Hey traders, Mike here. Today I want to introduce you to the world of proprietary trading, or commonly referred to as prop trading. It's a fascinating industry that has been around for decades, where traders are hired to trade various financial instruments, whether it's stocks, futures, or forex, utilizing the firm's own capital rather than its clients' or investors' funds like a hedge fund. These prop traders aim to buy and sell securities with the hope that at the end of the trading day, they generate an overall profit for the firm. However, the prop firm world has changed somewhat in the past few years and lowered its barriers to skilled traders who are looking for funding. Instead of going through the interview process, traders can pay for a performance evaluation, and if they meet profit targets, they get funded by the firm. So a month ago, I decided to reach out to the CEO of Trade the Pool, a leading online stock trading prop firm, to get his take about his firm and the industry. And here's an interview that I had with Michael Katz. Just tell me, maybe for our viewers, tell me a little bit about your trading background and how you started Trade the Pool.
Yeah, so my background goes like 15, 16 years ago when I first started to trade or came across trading. I actually started as a gamer. I used to play a lot of shooters and stuff like that. So I took that skill and basically put it into the trading, the trading game, as I see it at least. And, I started as usual. Took me 2 years to get my head around everything, just understand what I need to do. Obviously, I understood back then that I need enough capital to trade with, because I started with $10,000 and I needed obviously much more in order to really see any type of success, because I didn't know the methods that I need to do, the risk management, the strategies, all of those things, but I missed the capital. So fast forward, I got my parents to give me some extra cash, started to trade bigger, saw some success, and that led me to this day, I guess, with Trade the Pool.
And maybe for our viewers, tell us a little bit about Trade the Pool, obviously how you guys started and what is it that you guys focus on?
Yeah, so basically we are a prop firm that funds stock traders. Currently, as we speak, it's for day traders, but right now we're working on swing trading as well. It will probably be in the next 2 weeks or so. So we fund stock traders any type. We have 12,000 symbols, ETFs, and stocks that you can trade on. And we are the only one, at least that I know, that actually provides so many symbols to trade on, hard to borrow stocks, low float, anything you want, basically.
Okay, and maybe you guys can tell me a little bit about the process that traders go through in terms of getting funded by your firm.
Yeah, so the process is very simple. You go through evaluation phase. You need to trade and reach a certain goal of profit. We have 4 tiers. We call it mini BP, super BP, extra, and ultimate. You choose one of them that you like. You join the program, you trade whatever you want, any type of asset and any type of trading strategy. You can do pullbacks, you can do trend following, counter trend, reversals, all of those things. And after you pass the evaluation, you get funded and trade on a real money, real account. And we split the profit, depends on the tier that you chose. We split the profit, at least for now, up to 80% to the favor of the trader.
Mm-hmm. And you mentioned various tiers. Maybe you can kind of elaborate a little bit about that. How does each tier different?
Yeah, so basically it goes from the mini BP, mini buying power, for those who want to just try it out and see if it fit for them. So they will basically pay $97 to get through the evaluation phase, and they will have 20,000 max exposure, so $20,000 to trade on, right? And they need to reach their goal. They have a daily loss and a maximum drawdown. And on the other end, all the way to the top, we have the ultimate BP, ultimate buying power, and that will give you $260,000 to trade on. So you also have in the middle the super buying power. It's $80,000, and the extra buying power it's $160,000. So lots of capital to trade on. You have a daily loss for each one of the tiers. It's not, if you reach your daily loss, you're not out of the game. You actually stop for the same day. Most of our funded traders will tell you that this is by far the most important, risk manager, we'll call it a mechanism that helps them to succeed and survive in this game, because we stop them right when they see that they're not making any progress the same day. We stop them and they will come the next day and basically will continue from that point. So a daily loss, maximum drawdown, pretty straightforward program. It's amazing, Mike, because we have guys that have been trading for 10 years, 15 years, but we also have guys that got funded and they're only trading for like 6 months or a year, and that's crazy to think of it like that, because traders that actually trading on $160,000 only been trading for 1 year and making profit every day or every month or so with us. So that's incredible to see. Not something that we had, back in the days, right?
Yes, yes. And I mean, you and I, we've been in the industry for quite some time. Maybe can you maybe share, like, how have you seen day trading evolve, specifically in the stock market? The game's kind of changed. I mean, it's changed quite a lot for me since the late 90s to, again, the financial crisis, and especially what we saw during the peak of the COVID pandemic. How have you seen the whole industry evolve, or how the whole day trading evolved?
Yeah, I mean, the market been crazy for the last 3-5 years. Yeah, from the pandemic, I guess, maybe a little bit before that, but the pandemic made a lot of traders, a lot of guys to join, right, to start opening account with a broker or a prop firm and start trading. So you see a lot of volatility. The market itself just moved like crazy. Take 7-8 years ago, the SPY would have made like $1.50 on a crazy day, and today it's just a minute or so until it does that. So we got a lot of volatility, and that's obviously great, especially for day traders. We love this volatility, and we have great volume coming in. So liquidity as well, a lot of great stock, like big names, Tesla and Amazon and Google, but also, those FDA approval kind of names that popping up like crazy, 20-30% a day. So yeah, that's you see a lot of activity, and this is what we want basically as day traders. So
yeah, absolutely. Volatility is the name of the game, and if there's no volatility, us as day traders, we're not able to make money. Tell me a little bit about, like, how do you guys support traders? I know you guys have a lot of tools and software to support day traders.
Yeah, so my idea for all of this, when I started Trader Pool, it was obviously give guys enough capital to trade on, enough symbols to trade on. Top of the line trading platform, and basically to bring some tools, important tools, to give them an edge, right? So I got a lot of good partners with me in this one. So for example, when you sign up for Trader Pool, you get Trader Sync for free for 30 days for the evaluation. So Trader Sync is a trading journal. It will analyze all your performance basically, and will tell you exactly what you did wrong or good on a trade or generally on your account. That's amazing to have. We're working on Bookmap. It's also a great tool that show you liquidity in the market and limit orders that are waiting in line. You get, depends on which tier, you also get either trade IDs or Trend Spider for free as well, included in that program, the evaluation. So Trade IDs is obviously one of the biggest name, very known company for scanners intraday, and Trend Spider, a little bit newer, but great company as well, that basically give you trading program tools. You can analyze the chart with a lot of unique indicators and stuff like that. So those tools, you see automatically that they will push and will push other traders to become funded, because it just gives you another edge in the market.
Yeah, and you're so right, Michael. I mean, before, when we started, I mean, we were just basically trying to read the tape, right? And trying to look at just the bid ask. Now there's so many tools, analytics. I remember I had to just copy down all my trades and basically analyze each trade by trade and trying to find out, well, what was the reason why what was my win-loss ratio, or what was the risk reward that I took on each trade, and everything now is available. Like, in terms of all the traders that you fund, like, how do you guys measure the success of your traders that you fund, and what do you think are the key performance metrics that you've seen traders who pass your challenges and actually get funded and actually making money?
Yeah, I mean, a few things. First of all, I really like to know my traders, the one that trading with me, So you will see me spend lots of my hours a day, not just on working on partnerships and webinars and stuff like that I do, but also just going through the trades the traders make and their account, to analyze it and see exactly what they do, how they think. I also stay in touch personally, either through email or Discord, stuff like that. So what I say, first of all, definitely a risk management part. And this is something that we implemented in our trading platform, like in the back office, the default mechanism for risk. So either the daily loss, we also have 30% out of the daily loss for risking per trade. For every execution you take, you cannot risk the full daily loss, because then a lot of guys will try to go for the big win, right? But basically, you can only risk 30% out of your daily loss per one execution. So a lot of traders also, I see it, and also told me that it helped them tremendously, because it keep them in the boundaries, right? Because you do have a lot of capital that you can trade and just blow the account. So instead of doing that, we just keep them in line in the box, and they can trade much better. So definitely a risk management part that's already included. Other than that, you see guys that trade in big names like Tesla and Apple, Qs, SPY, IWM, big names or ETFs. But you also have the guys that looking for, like I said before, like the penny stocks, really like them. I personally don't have any good feeling about it, but I better trade Tesla and the Qs. But generally speaking, both of them can do good, as long as they stick to the risk rules that we provide, and also the scaling in. I also teach them, and this is something that I talk about probably a lot in webinars and other places, is that you need to scale into your position instead of just going with the full amount and put your stop loss. That's it. You basically need to give yourself enough room to work the price, right? You have a great supply area. Now you need to buy around the area and not just one click, and that's it. And I see that when they do that, when they work the price instead of just trying to predict a certain point to get in, it's much better, because the price can play around, manipulate, take stop losses, and then work to their favor.
Mm-hmm. Yeah, and Michael, I couldn't agree with you more. I mean, my number one rule has always been risk, right? Because that's the only thing that you can control. The markets will go up and down, but the only thing that you can control, and that's why some of the things that I like about what you guys are doing is it actually really helps develop a trader. Because I've seen traders who get lucky and they think they're on top of the world, but really their skills aren't that great, or they haven't really achieved the necessary skill sets that you need to have a long-term career in trading. Now, talk a little bit about to the contrary, what are some of the things that you've seen traders do that continually cause them not to be able to pass the challenges, or certain rules that they keep breaking that lead them to not having success?
Yeah, so I guess there are two ways to look at it. First, just before I came to this call, I had chat on Discord with one of the guys. He reached like probably 85% of the target he needed in order to become funded and went all the way down. Now, he told me he needed my help, and of course, I'm happy to help anyone that reach out. And basically, we went through the trades that he did, and you see a different way that he took as soon as he reached that like 85% to the top. So something happened, like mentally happened to him, like euphoria or anything, something like that, or greed that came in. And basically, instead of continue to trade the same way, he changed completely. He went to the penny stocks instead of continue to trade on the Tesla that he did perfectly well before. He tried to went for a bigger size, and basically, like I said, instead of working the same sizes that he did before, those kind of elements that basically made him drop all the way down. So this is one way that I see traders go. They do great, but for some reason, when they reach the top, there is either a fear of success, right? A lot of traders or in any performance field will reach almost the success, but for some reason, like mentally reason, they cannot reach that. They fear of actually holding the success in their hand. And on the other side, you see just traders that go all in and just try at least to go all in and just try to find the one lucky trade. And we're not looking for that. We have a certain rule that you cannot, your best trade cannot exceed 30% of the profit when in the evaluation. So you do have guys that made like 60% of the profit in one trade, and this is not something that we would like to work with, because in the end, like you said, it's about consistency and about long term. And so we see those types of traders.
Mm-hmm. And again, Michael, you're so right, because I really focus a lot on trader mindset, psychology. You can, like a lot of people say, is that, well, you need a lot of knowledge. You need to know the strategies. You need to know what type of stocks to trade. Yes, definitely. I mean, that's just basically an entrance to the game, right? And but the difference between the not so great traders and the really good ones, it's being able to manage their emotions, because again, if you guys are trading volatile stocks like Tesla or stocks that are basically in play, there's your reaction time or your ability to think on your feet or being able to follow your plan, right? While the markets are going wild, it takes a certain special skill and a skill that can be developed.
Yeah, no, definitely. Us as traders, it's similar to any type of performance field, like basketball or soccer or car racing, right? You need to be able to come back from a loss. You need to be able to shift the momentum to your favor, to know when to step out or step down and pass the day. Don't trade on a bad day and stuff like that. That takes a lot of mentality.
And I've gotten some questions like from people asking, well, they've seen all these funded trader programs out there, and let's just say for some people, I have my own capital. Why would I need to trade with another firm's capital? I mean, the obvious reason being, you're not trading your own money. But what are some of the things that you kind of say to other people who say, well, I'm comfortable with trading with my own capital. I have access to the buying power, that type of thing. What would be some of the benefits working with a funded trading firm like yours?
It's a great question. I mean, I do have my own capital as well. And before I started to trade, for a prop firm in Tel Aviv, and of course, when I'm trading here in Trader Pool, I did okay myself when I traded my own capital. But there is something much different when you trade someone else's money. Your set of mind change, because if you want to really make big progress, you gotta put the money aspect aside of trading, right? And you cannot do that when it's your own money, because you worked hard to get that money. And when you trade in, you always think of what will happen if I will lose their money. This is why a lot of traders, when they trade their own capital, put their stop loss very close, because they just gotta, they don't want to lose their money, basically.
Yeah.
But when it comes to someone else's money, you don't really care, in a good way. I saw it on myself when I started to trade in a prop firm in Tel Aviv. I actually detached the aspect of money, and I started to trade much bigger than what I did on my own capital. Not just because I had more capital to trade on, but just the set of mind changed. So that's by far the most important element, in my opinion. And besides that, the default mechanism that we apply on your own capital, you cannot apply daily loss. The broker doesn't give you that option, or the 30% of the daily loss, or stuff like that. So, when you have someone that protecting you, you will succeed. In most cases, you will succeed much better than trading on your own.
And again, Michael, you're so right, because when you trade your own capital, is sometimes you don't really have someone to answer to, and you just basically, you have no control, right? No one's really controlling, saying, hey, listen, if you lose a certain amount, yes, you can say mentally, I will close my account, or I will, shut down my account once it exceeds my max loss limit. But to actually have software, have a firm to be able to have these risk parameters in place, and sometimes we're humans, right? We sometimes lose control, or we have a bad day, and or we go revenge trading, all these type of things that can really happen, and happen for many people. And you guys having the ability to control all that, and perhaps also having not just trading alone, trading with a community. I think that's some of the things that traders can be quite lonely, and being able to interact with other traders would be great.
Yeah, no doubt, definitely.
Yeah, and tell me a little bit about how do you see the whole funded trading industry evolving? I know this, like I've been in this industry for a while. I've seen a lot of prop firms try to recruit traders before, mainly just in terms of trading firm capital, and obviously they go through a screening process. With now a lot of the funded trading firms, obviously you need to pay to play type of scenario, and obviously the goal is to try to develop traders so that the traders can make money for the firm. But how do you see the whole industry evolving? Because we're seeing, for some people, are seeing advertisements everywhere where to sign up for these type of firms.
Yeah, definitely. I mean, if you look like 6 years ago, 7 years ago, most of those companies were around the Forex industry. And that's maybe was the beginning. I mean, the online prop firm, not the local prop firm. And if I'm not mistaken, this is the future of trading. I mean, why would you go and take your $5,000, $10,000, $20,000 that you have in your account, in your bank account, and risk it? And instead of just paying like $300, $500, and have much more capital, and not risking that 3,000, 5, 10, 20 of yours. Plus, you get those, for example, in our case, you have those bonuses like Trade Ideas and the other platforms, and you can have this, the risk mechanism that we talked about. So in my eyes, it's the future of trading. I don't see any reason, seriously, I don't see any reason to trade your own capital when you have an opportunity like we present. I've been trading for a while. I can literally say that. I know that I'm biased because it's trade a pool, but generally speaking, I literally don't see a reason to do that.
And I know you guys also have another subsidiary, or a firm that actually has been around much longer. Maybe you can kind of share about that. It's focused on Forex, is that correct?
Yeah, so the Fivers is the name of the company, the parent company, and it's been around since 2016. very well known in the industry, very respected company. And basically, after Gil, the founder, approached me. We talked about it. He explained the way they doing it. I gave the idea of what to do. We trade a pool, and we came up with it. And the rest is history, like we said.
So how do people get started with Trade the Pool? I know you guys, do you guys offer like a free trial to kind of just get their feet wet and to be familiar with your platform, and then go through the challenge process?
Yeah, so basically you can just sign up for free for 14 days just to get an idea of the trading platform, because it's a new platform for most people. So, just play around with, buy, sell, just to get around the platform. Within those 14 days or after that, you can join one of the tiers. So either from $97 all the way to $1,200, you choose the daily loss that you want, or how big you want to go, the maximum exposure, etc. And from there, you just start trading. You have, for now, 45 days to day trade. And as I mentioned, in the next 2 weeks, 3 weeks, we will have also swing trading. But for now, for day trading, you have those 45 days to reach the goal. In case you didn't reach the goal, let's say it passed like 45 days, but you reached 80% of the goal, you can pay another month of fee, and keep the progress. So you not start from the beginning, you actually can continue to trade for that extra 20% that you need in order to reach the goal. And from there, you will become funded.
Okay, great. Well, I really like what you guys are doing there, Michael. I mean, I've gone through that process in terms of prop trading before, and the things that you guys are doing is very, very different, because I haven't really come across a firm that actually offers stocks, right? Lots of Forex out there, but what you guys are doing in terms of in stocks, and especially people who don't want to trade their own account, or they don't have the necessary capital. I mean, you guys offer a very, very good alternative. So I'm going to go through that process myself. So I'm looking forward to that challenge as well.
Yeah, sounds great, Mike.
Yeah. Well, thank you very much, Michael. And I look forward to speaking with you more in the future.
Yeah, definitely. Thanks so much.